Another disappointing session for Wall Street last night, although we are getting a bit of a bounce in early trade today. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Yes, it's Wednesday and what we're seeing at the moment is a bit of a bounce back across US stock indices after a decline yesterday. Last night the Dow ended the session down 1.3%, the S&P was down 1.4%, the NASDAQ down 1.7%. We haven't recovered all that yet, but we are seeing a little bit of a blip higher across US stock indices and indeed in some risk assets like gold and silver, and we're seeing a little bit of a pullback in the dollar. Now yesterday, part of the reason given for the sell-off was a very strong JOLTS job openings number from the US. In other words, it was all good news on the employment front. Now today, very different indeed. Today we had the ADP private non-farm payroll figures out. They came in at plus 89,000. It was expected a figure of 153,000. So that was well below expectations. That's what the market wants to hear, because it's figures like that that show that employment is pulling back, that the unemployment rate might be ticking up. That fuels the fire, the thinking that the Federal Reserve may not hike rates as high as a lot of the fears are at the moment. They may even start to consider keeping things on hold or maybe cutting, and we've only just heard from them. They said that they don't really envisage cutting more than twice next year, down from expected 4 times back in June. So, it's all playing into this. But as things stand today, yes, we were sort of pushing higher anyway, getting a little bit of a bounce back, and now that's put a little bit of a boost under that, getting these worse than expected jobs figures. Bear in mind, this is all a precursor to Friday's non-farm payroll report, which is going to be the big important data release. Now, you can't look at Twitter or X or anything at the moment without being bombarded with analysts talking about bond yields, how they have skyrocketed, not just in the US, but right the way across the globe. And indeed, UK gilts back to levels last seen when we had last year when we had the disastrous mini budget from Liz Truss. Although, in fairness, those gilt yields were rising quite sharply in advance of that due to shenanigans in the pensions industry. But that's by the by. The point is that we've seen the key US 10-year Treasury note got up above 4.85 this morning. Another new high going back to, I think, October, even before that in 2007. Big moves in these yields. We've actually seen quite a hefty pullback, and we're trading at around 4.73 at the moment. So that is a very, very big pullback in early trade. That's again helping US stock indices and other indices to push higher this morning. Let's see if they can hold and build on these gains. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading. Goodbye.